markets, as long as they know what the rules are going to be moving forward, and as long as that's set and you can sustain where you're going to be, the markets will adjust. Businesses around the world, including in trade and global trade, they just need to know what the rules are. Once they know what the rules are, they will adjust to those rules. So I don't think it's fair to say economies are crashing. Markets are crashing.
We have to start exactly there with the markets tonight, where the sell-off continued despite Donald Trump's Secretary of State Marco Rubio downplaying the impact 2 days of Trump's global tariffs and now retaliation from countries including China led to this now nosedive. Pardon me. Take a look. The Dow Jones dropped more than 2,000 points, the biggest decline since June of 2020. The S&P 500 dropped 322 points. The TSX dipped more than 1,000 points, and NASDAQ fell almost 1,000 points. With me now, the host of Taking Stock on BNN Bloomberg, Amanda Lang. She's going to help us walk through some of the damage done and what might be ahead. First of all, just a greater context, Amanda, greater significance of what's unfolded in the markets over the last 2 days.
We just haven't seen a sell-off like this since there has been a crisis in the world. So the last time we saw it was in the pandemic, also a time of great uncertainty. It was short-lived. We saw this kind of massive one-day declines in the heart of the financial crisis. So you did see 7-8% moves lower in the stock market. And again, a reasonably short-lived crisis that the world came together on. The difference this time is the uncertainty will continue. Marco Rubio's not wrong in the sense that once investors and markets know what to price in, they'll price it in. But uncertainty is not something that a lot of investors like. So what you're seeing is worst case scenarios being priced in. The only glimmer of hope I'll offer you, Vashi, is that today Nike shares were up. And yesterday they were down something like 13%. That tells me that people may have decided they've figured out where the pain point is for Nike. We might start to see that next week, where markets settle in and we wait for more data.
I think a lot of people will be listening and watching to that data and thinking, well, you know, the markets aren't necessarily something that's a big part of my life, or they don't think so. But a lot of people have money through their pensions, for example, or other public sector issues tied up in the markets. What do you tell them tonight, or people who are, for example, worried about retirement being around the corner?
Nobody should, I mean, ordinary folks should not respond to these kinds of events. If we take our portfolios into our own hands, we tend to do the wrong thing and we tend to sell at the bottom. So it's terrible, but look away for now. If you have a financial advisor, and if you can have one, do have one. They're the ones that can manage through this. The bottom line on this is it really depends on where you are and when you need your money. If you don't need your money now, if you're, 10 years or more away from retirement, you really shouldn't do much other than think longer term about the mix of things you want to own. For people that are living off the markets, this might be a bit of a wake-up call of whether they have safe enough things in their portfolio. We've seen a lot of people moving more towards stocks because they grow more, and away from safer instruments like debt securities because they've been so badly performing. You need a bit of safety if you're living off your money, and this might be a reminder to think about the mix of your portfolio. But I'll tell you, I'm not a financial advisor. I'm not giving advice here. But if you ask me as a friend, I would say this is not the day to fiddle. Ask your advisor, ask a professional, but don't go in and mess around when markets are doing this, because you're catching a falling knife, as the saying goes, and that is never a good proposition.
You mentioned Nike. Are there other touch points that you're going to be looking specifically at over the coming days to figure out where this ends up landing, if there is any ability to figure that out ultimately in such an uncertain time?
Yeah, I mean, the ones that I'll watch are those that really play off recession fears globally. So things like copper can be a real bellwether test of what growth looks like. Closer to home, we'll watch for things like FedEx, UPS. The delivery companies are often a really good measure of how they think the consumer is going to do. And then, of course, we have seen these weird pockets of strength from companies that are very domestic oriented. The owner of this network, BCE, up again today. We saw Loblaws doing well yesterday. So there will be little kind of islands where people will flee. I'm seeing a glimmer of hope. I haven't seen the futures markets to know whether the whole market is turning. But when you start to see buyers coming in on some stocks, it suggests that, for every seller, there's a buyer. And at some point, the buyers start to get more optimistic than the sellers.
Just one more question for you on the bigger economic impact, because for months you and I have been talking about what the uncertainty might do, what this, how difficult it was to quantify because we didn't have any data points quite yet. There's been two in the past 2 days around trade. I think it was yesterday or maybe the day before, and then today with the job market. That does show some impact in the month of March in particular. What do you take from that, and how much worse do you think it will get now that we have some tariffs actually in place?
I would say even if all of this ended tonight, if Donald Trump woke up and said, April Fools, it's all over, back as you were, damage is still done. And it's been done, and it'll continue to play out. And because there's an opportunity cost in things that haven't happened that might have. Companies aren't investing. So that's where you start to see layoffs. Even before the tariffs really took hold in most industries, we are going to see damage. And unfortunately, Vashti, this wasn't an April Fool's joke. This is going to continue, and the pain will be global in nature. So, I haven't seen all economists say for sure a recession this year, but the odds of it increase every single day. Job losses follow recessions. And then we know with job losses, you see the housing market affected, you see consumer products affected, the knock-on continues. So shore up your own finances is what I would say. Look to your own state of affairs, because you can't control what else is happening. The news broadly is maybe not so good for a while.
Okay, I'll leave it on that note. Amanda, thank you as always for your insights. Appreciate them this evening. Thank you.
Sure.
That's BNN Bloomberg's Amanda Lang.